PrimeXPT is the most powerful trading platform offering immediate access to over 30 assets. Trade cryptocurrencies, Forex, commodities, stock indices, and much more, all from a single Bitcoin-settled account. Visit the link below and start trading on PrimeXPT in minutes.
Birb Network is an interoperable DeFi ecosystem offering token pre-sales, staking as a service, project incubation, and much more. Visit thebirbnest.com/Birb. Globe is an upcoming crypto derivatives exchange offering up to 100 times leverage on crypto and DeFi perpetual contracts. Sign up for early rewards at thebirbnest.com/Globe. Radix is the first Layer 1 protocol built specifically to serve DeFi. More information at thebirbnest.com/Radix. YFDAI is democratizing finance by creating the most secure, transparent, and user-friendly ecosystem of DeFi products. To learn more, visit thebirbnest.com/YFDAI.
All right, what's up, guys? Welcome to day number 2 of the 200K Traders Congress. In this webinar, I'm going to be talking about entries, like how do I, perfect my entries, and also I want to talk about, how do you predict a bottom? Not predict a bottom, but I'm going to show you like how does a confirmed bounce look like, what's a confirmed retest, and what is a confirmed bottom, right? That, I always talk about, waiting for confirmation, and that's what we are going to talk about today. Confirmation, very important, very important. And last but not least, today's giveaway is basically going to be a one-on-one call with me, an hour or more if needed. And I'm going to break down my system, right? So we're going to have a private one-on-one call where I am going to break down my Forex trading system and my crypto trading system. And you're going to be able to ask me whatever you want. I'm going to guide you through the details of everything from the beginning, where we start with the horizontal levels and then we add all the indicators, and the idea is to give you a good basis to kind of go out and find some interesting charts on your own. And that's going to be like that's basically what we're doing in the private mentorship program, while we're having weekly one-on-one calls where we kind of guide you through all the details of my trading system. All right, so yesterday we talked about the Fibonacci retracement tool, and I mentioned a very important thing yesterday, and that is the market structure, right? So everything I'm going to talk about in all webinars is going to be horizontal levels. The base is always going to be horizontal levels and market structures. So I'm going to just repeat that until it's very, very clear. So I need to show you the basis of what a trend looks like, right? According to what a bullish market structure is, and what a bearish market structure is, and how a top and a bottom might look, and what type of hints that you can expect to see at the top or at the bottom. So with that, I want to go to Bitcoin, right? So we're going to take a look at the Bitcoin chart. So go to BTC USDT, USD on Bitstamp, and let's just remove everything here so we have a completely clean chart. And this will show you a very good example of what I'm talking about, right? So on the Bitcoin chart, this is quite obvious, right? You have a picture perfect trend, right? Let's say, let's say that this down here is the low, right? The first low. Shad says there's something wrong with the Gleam link, so maybe Amy, my co-host, who's taking care of everything behind the scenes, maybe she or can contact an admin or whatever and see if we could fix that. The link is apparently not working. Anyway, that's going to be the low. So this is going to be the high. That's going to be a higher low, and that's going to be a higher high, a higher low, a higher high, and a higher low, and the higher high, right? So this is a picture perfect uptrend, a bull trend, right? Now to like the first, there's a link in the chat to the Gleam giveaway. Check that out, and we're gonna be running the secret code in on the webinar. So make sure to watch the webinar. So the idea of a bullish trend is, you have higher highs and higher lows. So what happens if you start to see a lower low? Well, printing a lower low would be the first sign of either a potential reversal or for a range to start, right? Because a range usually has equal lows and equal highs, and that will look something like this, right? So when you have a lower low or equal highs, whatever, you have a potential reversal going on or a potential range forming, right? So this low right here is obviously lower than that low. So this is our first daily lower low in a sequence of higher highs and higher lows, which is the first sign of a potential downtrend forming, right? So this is an uptrend, and this would then be a potential downtrend. I'm not saying Bitcoin is entering a downtrend. I'm just trying to teach you the first signs of a potential reversal, because that's going to be very, very important when we look at the confirmation of entry on the lower time frames, right? So this is the daily, and then we're going to when looking for confirmation, we're going to look at the very low time frames, like the 1 hour, 15 minutes, 5 minutes. But if price creates a lower high here, a lower low, and then maybe a lower high here, and price comes down and forms this trend, well, obviously that's going to be a downtrend, right? So this area right here, this area right here is your reversal. That's where the reversal happened, right? So what was the first sign of this breaking? Well, you're looking at the behavior of the trend, right? So the behavior of the trend is very, very important to identify. And right here we have a very clear pattern, a very clear behavior, and this is a change in behavior, right? You can also look at the moving averages here, where you have the 20 EMA and the 50 EMA. Let's remove the other ones. So you have right here the 20 EMA, the yellow, and the green 50 EMA. That's going to be a very good indication of this trend, and that's the behavior of this trend according to the EMAs is you're holding the daily 20 EMA in a very high momentum bull run to the upside. When you lose momentum, you come down and you bounce off the 50 EMA in the daily. So losing the daily 50 EMA and creating a lower low would be a massive change in behavior. We lost the daily 50 EMA right here, and we created a lower low. So that if this plays out, that's going to be, this would be your first signs of that. And that is one reason why I started to scale out of Bitcoin when this happened. But I've now again started to scale in, because we're back above the 20 and the 50 EMA, and we're kind of back inside the bull mode or whatever. So this is called if this plays out right here, this is called a bearish break in market structure, right? A bearish break in market structure. Basically, it's a break in market structure, which means that the market structure has now broken and a potentially new market structure is forming. So you have a bull trend, distribution or accumulation, and a range, whatever you want to call it, and then a reversal. So that's Bitcoin. Now let's talk about the next step, which is going to be actually showing you guys live how this would work when actually, optimizing the entries. So we're going to keep looking at Bitcoin here on the BTC USD chart on Bitstamp, and we're going to be looking at one bounce in particular, right? So you guys will most likely see me a lot, talking about how I'm only interested in buying strength and selling weakness. I'm not going to be trying to predict the bottom or try to, catch a falling knife, or, if I see prices dump straight into an interesting area, I'm not going to put orders in there. I'm going to wait for a bullish break in market structure on the lower time frames inside that zone that I'm interested in buying. So using the technique that we talked about yesterday in the Fibonacci retracement webinar, you guys know that I like the area between the 786 and the 618. That's going to be the RLC area, and in this case it's the long RLC on Bitcoin right here. So we're going to look at this example right here, where we nicely came down and we started touching the 618 right here. So we touched the 618 right here, and it's obviously a beautiful level right here. It's beautiful SR level, right? Look at that, very, very nice, right? It's a very interesting area right here, but I'm not going to be buying here, because what you have now is a clearly defined downtrend on the 4-hour, and that downtrend looks like this, right? You got higher lows, you get lower lows, and you have lower highs and lower lows. It's a very clearly defined a downtrend on the 4-hour. So to really, as a swing trader, obviously you can use this on any time frames. Using this on the 4-hour right here would obviously be a swing trade on Bitcoin. But let's see if we could get a, let's see what happens here, right? So we go forward, and I don't really want to buy this right here. I'd like to see confirmation of strength, and that would be either you come down here in range and you form like a nice rounded bottom and a big fat bullish pin bar, or bullish engulfing on the 4-hour right around this area, or a 1-hour uptrend forming, or maybe a nice 1-hour uptrend and reclaim up to 50%. So you can have a rounded bottom, 1-hour uptrend, and round the bottom on the 4-hour, 1-hour uptrend, bullish engulfing, something like that, and reclaim up to 50 to kind of show us that this might potentially be the bottom. So let's see what happens here. As you dip down into the long RLC, hit the 702, and there's a couple of ways you could play this, right? There's a couple of ways, and depending on what your risk profile is, if you're, for example, if the next candle would be a 4-hour bullish engulfing, kind of like that would obviously be a very bullish candle, because you're bouncing off the midpoint of the RLC, confident with that trend line, and you're closing above the 618. So that would be one type of entry signal, but it's still, it's still rather risky, because you're still in a 4-hour downtrend, right? Let's see, the next candle is I'm not sure if I would call that a golfing, really. It's, I don't know really. So I would not take that trade right there. I would wait for something like this, right? You now have there's potential W right here, where if you would get a move like this, that would be a break in market structure on the 1-hour, because you have a low, lower high, lower high, low, lower low, and then you create a higher high and then a higher low. That would be your entry, right? A W, a double bottom, and I talked about this in the webinar yesterday, where you want to see a double bottom inside the long RLC. The screen is dark. Can it be brightened a bit? I think you have to brighten your screen, because I can't do anything about the brightness of your screen. I don't think that has anything to do with my screen. I'm sorry. So let's go forward. Now you have that. Now you see you start to form a potential around the bottom here. You have a, let's see, you have a potential around the bottom here. just like you had a potential rounded bottom here and a potential rounded bottom here. Now, the difference here is you're not getting a breakout here. You just move straight down. You are seeing a W right here and a breakout, but no confirmation. So you're dumping. Now, what we're looking at right here, we're looking for a breakout and a confirmation of a bounce somewhere, let's say somewhere in this area right here. I haven't really checked this out before doing this example, so this might just be completely wrong. I don't know, but let's see how this works out. The principle is going to be the same even if this works out or not. That's your strong bullish candle. And that's the breakout of the rounded bottom and the W, or whatever you want to call it, right? And let's see if we get a confirmation down here. That's your move down into the area, right? I could just do this, right? Now you can't see me. Would you guys rather prefer this or this? So if you have a confirmed bounce here, and now let's talk about the actual, the confirmed bounce. So what I've showed you now is how you're going to use the market structure and a break in market structure as your confirmation of a potential bottom and a potential entry. But now what you want to do is, instead of, just like we weren't going to put in blind orders right here, we're not going to be putting in blind orders right here. We are now going to wait for confirmation. So what we could be doing is we could be zooming in on like the 15-minute and look for the same break in market structure on the 15-minute, but inside this area. So you look for something like this inside this area on the 50-minute, or you could just look for a 1 hour bullish pin bar or bullish engulfing or something like that. So let's see what happens here and how this plays out. Now this I like. I could definitely view this as, the confirmed bounce and retest of that level right there. Because if you look at this trend right now on the 1 hour, this is definitely a change in behavior, right? Let's remove all of this. Remember I talked about the, identifying the behavior and the characteristics of the trend on the first high time frame shot I showed you on Bitcoin. So let's try to identify the behavior of this chart right here, or this trend. We have resistance here. We can't get above that resistance area. We can't get above that resistance area, no breakout. And we got a resistance area right here, a W on the 1 hour. We're breaking out, but we failed to bounce here. Now here we are seeing a bullish break in market structure with a bounce right here. But that's what I like. That's a change in behavior, because now you have a bullish break in market structure on the 1 hour inside a 4 hour downtrend. So the 4 hour downtrend is still down, but the 1 hour local trend is up. And the obvious, like the absolute safest way to play this would be to wait for a second confirmation, which would be the second higher low. So the second higher low would really confirm this as an uptrend. So you're looking for something like that. That's the first confirmation. That would be the second confirmation. And I like that because that's also, confluent with the 50% area right there, confluent with a pretty decent SR level right there. So let's see what happens here, right? Now let's say, for example, you want to enter right here. Let's view that as your confirmed bounce. Your stop loss, either a very tight stop loss right below this area right here, or even down here if it's supposed to be a swing trade. Because if you're trading off this RLC right here, you should probably be using these levels as your take profit area. So that's going to be a 5.7 our trades is definitely, you know, acceptable risk to reward. However, if we do get a confirmed higher low here, you can then use that low, which would give you a much higher risk to reward, right? So let's see if this plays out. Right, there we go. That's the breakout. And now we're looking for a, you know, a reaction of that trend line or that trend line area. This trend line is obviously not perfect, but let's see if we can make it perfect. Right there. So that's a reaction of that trend line area. Now, if we can come down and form a low here, that would be perfect, right? So that's our confirmation. So let's see if that actually happens. And of course, if that happens at the same time while you see a bullish engulfing or bullish pin bar, that would absolutely, you know, confirm this. That's a touch. And here you have your bullish engulfing on the 1 hour. You see how it's touching that 50% right here, and stochastics is also showing a buy signal right here. So if you want to be like, if you want to take high risk trades, you know, high risk, high reward trades, you would look at this right here. You will look at this chart right here on the 4 hour and the daily, and you know, you get this up move right here, and you're starting to form a downtrend. Now, you might have identified this long RLC several weeks ago, right? Several weeks ago. So you're waiting several weeks for this RLC to get hit. So let's say you have waited, you know, let's say 2 weeks for this level to get hit. Obviously, if you're waiting 2 weeks for setup to set up, you're not going to be rushing into an entry. You want to have confirmation that this is actually the long that you want to take. So you're going to sacrifice you know, some percentage of P&L to be able to get a very high probability trade. And when you do it like this, you're going to be able to take very high risk to reward trades. But it's going to be very risky. And I do not recommend taking these you know, tight entries without actively managing the position and actually being at the shop, because this would basically be scalping, right? So if you, for example, get, you know, if you enter right here, let's say you enter right here with a stop, you know, even, you know, down here, if you get stopped out on this one, you might want to enter, like if price moves like this, stop you out, moves like that, you will obviously want to enter again right away when you have a confirmation of continuation of the bull trend and the breakout. You want to enter right again. So let's just, you know, let's take some risk here and put the stop loss, you know, below that level. Now let's see how this would play out. Yeah, you see, you now have that confirmation. You're now breaking out. So that would be your that 1 hour bullish engulfing candle on the 50% level would be your highest probability entry, most likely. So let's see how this actually plays out. You guys probably know where Bitcoin is heading after this, but I guess you could start to I mean, even here it's going to be 1 hour. So I'd say up in this area, you should probably, you know, secure your position and take some profits and just let it run. Let's see how this actually plays out. Yeah, well, yeah, so that would be some profit taken right there and securing the position. And, you know, yeah, at current price right here, that's going to be a 2.5 hour trade. So let's say you're just going to take profit at the right below the previous all-time highs, because that's going to be a pretty nice trade. It's 4.5 hour. So let's see how that plays out. Yeah, this you're probably gonna, like, if it, yes, you're probably gonna get stopped out at entry right here. But the idea is quite simple. So what happened here was you catched a reversal, right? And the first sign of this reversal right here was, first of all, you were coming down into the long RLC, right? So you go back to the daily, and you see right here, or the 4 hour, and price is coming down into the long RLC right here. So that's your area of interest. Now you want to use your knowledge by, you know, with the market structure to look for a proper break in market structure. Now look at this, for example. Look at this. You have right here a 4-hour bullish engulfing candle that is closing above the 618, right? So that would also be a beautiful entry trigger right there. Just enter on the candle close, but this is going to be risky because it's most likely going to be, if you look at the 1 hour, you know what? This is perfect. This is perfect because what happens right here is, while at the same time you're printing a 4-hour bullish engulfing candle, you're also getting a let me show you here. Let's remove this. So you get, like I said here, you have the high, lower high area, lower low, and lower low. I would view this as the beginning of a higher low, a high, and now a higher low. So that would be your area right here. Something like that. It's not very clear, but when you get this, that bounce right there will also be the close of the 4-hour candle that prints a bullish engulfing. So that would be a beautiful entry right there. And if you enter right there, you would also have a very obvious stop loss level, which would be the last higher low, prior to the break in market structure. So this would obviously be a quite nice trade where you could trade it up to the last highs and start to probably, you know, secure your position on the reclaim of the 50% fib. So when the 50% fib is reclaimed as support, you now have a very nice confirmed bullish break in market structure. You would maybe take 25% profit here, move stops to entry. You know, maybe 25% profit here, 25% profit here, and 25 here, or just 25% profit here, move stops to entry, and then move the stop loss up with every swing low, and you would probably get stopped out somewhere in that area right there. So I think that kind of gives you a good overview of everything shown at once. So to kind of summarize what I've talked about here, I'm going to show you one more example on USD/JPY. And USD/JPY was actually the setup that we looked at yesterday in the webinar about the Fibonacci levels, right? So we are going to we're going to look at USD/JPY and talk about that setup that we talked about yesterday, which turned out to be very nice. Right? So this was obviously not yesterday because this was the 27th, but I'm not sure, but we looked at, yeah, I can't remember the setup that we looked at yesterday, but let's talk about USD/JPY here, and we're going to be talking about pretty much, you know, how you could refine and really optimize the entries on this chart right here. So we got one question here about volume. Like, I very rarely even look at the volume, especially not when trading Forex. I like to, like, the only time I really like to use volume is when scanning the altcoin market and, you know, when seeing a potential break in market structure, or for example, if an altcoin comes down into the high time frame RLC area, if I see, you know, let's say on the weekly and the daily, we are getting a retrace down into long RLC on the higher time frames, then I switch to the 4-hour and the hourly, and we start to see a potential bullish break in market structure. If there's a big inflow of volume, that also tells me that, you know, you get a lot of buyers coming in here, and you might be the shop might be ready to reverse, especially if it's in the high time frame RLC. But that's pretty much only time I really care about volume in the altcoin when trading in the altcoin market. And when it comes to Forex, I just don't look at volume at all. So let's look at USD/JPY here. So I've talked about how you should look at whatever time frame you're looking at. So let's say you're looking at the weekly and the daily, and you're gonna you're doing your analysis on the weekly and the daily, and you're gonna take the trade on, let's say, the 4 hour, right? So here we have USD/JPY on the daily, right? So let's use the replay function here. By the way, guys, the replay function trading is really, really good, really good. So if you're not using the replay function TradingView, like, please do get an account of TradingView, use the replay function, and trade it like it were live, and you're gonna learn a bunch. It's a really useful tool. Anyway, let's apply the fibs here. So we want to find the areas of interest, right? We want to find areas of interest on this chart right here. We're going to be adding the 20 and the 50 EMA and daily. And I also want to add a trend line somewhere here. Kind of, yeah, something like that. I'm not sure. But this area right here, we obviously have an interesting area at the 20 EMA and a daily, and then below you have the 50 EMA, 382 conflict with that trend line. So you have two interesting areas. First this one, and then secondly that one. So if you have a bullish break and mock structure on the lower time frames, like the 1 hour, the 4 hour, here I'm going to be taking along, right? But if you go forward, obviously you see that that's not happening. USD/JPY is continuing downwards, and it's continuing closer to the area below that we are interested in. Right, so if you're watching on the daily, and if you're only going to take a trade based on the daily, so you might want to look for a daily bullish engulfing or daily pin bar. Also note that the stochastics RSI on the daily is well below 20, and if this, if you see a bull cross, and especially if you see a bull cross and then a turn above the 20 while printing a bullish pin bar or bullish engulfing, that's just going to be a straight buy signal on the daily time frame, and I would just enter right on that candle close. So let's see what happens here. You hit the trend line, you're around the 382 and the 50. That's actually a nice bullish candle. And you have a bull cross on the stochastics. This is obviously going to be very risky, but this could turn out to be a very, very good entry, right? Stops below the wick of the current of the last one, and I would take profit at the 236, the 0, and the minus 236 as a high time frame trade. This would probably play out in a couple of weeks. So that is actually the confirmation on the daily, right? So that's the confirmation on the daily, and that turns out quite nicely. This is current price. Now let's look at that and also see how the stochastics kind of formed a nice bottom right there. So that's the confirmation using only the daily time frame. Now let's see what happens when we get a bullish engulfing on the daily. We go down to the 4 hour. So how is this looking on the 4 hour? Well, on the 4 hour we have a very clearly defined trend line area right here, and you got the green dotted lines right here is the daily 50 EMA. So obviously we have something very interesting going on here. So we're going to be applying the same method that I talked about on the Bitcoin chart, basically the break and mock structure, right? So we got lower lows and lower highs. We got that trend line right there. This is the high time frame trend line. We don't need that right now. We know that we know that it has been hit. We are in an interesting area. We're not going to be playing that trend line anymore. So we don't really need that anymore. Now, obviously, this trend line, you might look at this and like, what the hell is this? And I kind of agree that it's not perfect, but it's just here to show you, basically these low right here. I like how it's aligning with these. So we now have a somewhat of a SR level right here. You can kind of see how you are testing this resistance right here. And you now have, you have broken above the trend line, and this level right here is also confluent with the daily 50 EMA. So let's see if we can get a break and retest of this area right here, because that would be a bullish break in market structures. We got a breakout. Let's see if we could get a retest. That's probably, we're probably not going to get more than that. But honestly, looking at the 1 hour, I would view this as the break in market structure right there, because you have now reclaimed the daily 50 EMA. You have now created, higher highs and higher lows above this trend line and above that structure, and the stochastics RSI has pretty much bottomed out at this area right here. So you might want to enter on that bullish candle right there, and either use these lows right here as your stop loss level, or below that wick right there. So let's see how this turns out. So let's put a 40 pip stop loss, and obviously we're going to be using the same take profit areas, but because of the fact that this is going to be a high risk to reward trade, we might just put the profit taking areas at the 236, the first take profit area. And also note this, right? I showed you the Fibonacci tool yesterday, right? When you draw bullish fibs and bearish fibs. So let's put a bearish fib on this. Let's put a fib on this move right here to find resistances for potential profit taking. What we're seeing right here is, the short RLC up in that area right there. And because of the fact that this would be, I could just take profit at the midpoint of the short RLC of this down move, right? So you enter on that confirmation right there. You reclaim that level, and you're taking profit at the short RLC. I'm not sure if this is going to play out like this before we hit current price. Let's just go to current price right away. Yeah, so that's where we are right now. Look at that, it hits the 618 quite perfectly. So if you would just go long down there at 618, that would be a very good trade. Now, if you're actively trading this and you're actively watching this setup, there's certain things you can do to really be risky but have extremely high risk to reward trade. When you have a bullish engulfing candle or a bullish pin bar on an important level like this one right here, just put the stop loss right below the wick of that candle. Your win rate is going to be way lower, but your risk to reward is going to be much higher. Right here in this case right here, you have a 10R setup from the confirmed bullish breakout and the confirmed bullish break in market structure on the bounce and reclaim after 50 main and daily, coupled with a that trend line and everything. It's a bullish engulfing candle on the retest, and then up to the minus or the short RLC, the 618 right there. So a 10R trade. When I don't usually get in trades like this, but when I do get in trades like this, when I don't do them very often, but if I get a couple of these every month, this is what keeps me, this is what really keeps my portfolio way more profitable, right? This is really the trades that make my can make my whole year, right? Because if you do take a trade that's a 10R, it's very high risk to reward, which means that if you take a trade that's 10R, that means if you're risking 1%, you're going to be winning 10% on this trade, which means that you can pay for 10 losers. So you don't even need to have a high win rate to be able to make money if you figure this out, right? So what I've done here is I've looked at USD JPY on the daily time frame, right? When you're approaching this area and you start to retrace, you put a fib on this move, and you now know that you have two levels of interest. It's the 236 and the 382, right? When price hits these levels, you have alerts at the levels, and when the alerts go off, you go down into the 4 hour, the 1 hour, and the 15-minute, and you try to apply everything that I've teach you today. You look for bullish engulfing, bullish pin bar, bullish break in market structure, and you try to really optimize your entry. Because if you can get a very tight entry on a high time frame setup, you're going to be making very high risk to reward trades, most likely. So the key to, at least in my opinion, the key to successfully scalping bigger moves is to find a swing trade on the higher time frames and then optimize the entry on that trade. So for example, if you were to enter a swing trade based on the daily, right on that bullish candle right there, you know that you now have a high time frame swing trade playing in your favor. So you might want to have that bias that you could now be in a high time frame swing trade. So why not try to jump on the trend that trade is providing you with and get a very tight entry, but use the same take profit targets, right? Which in this case would be extremely profitable. All right, guys. I think that kind of covers most of this, right? So let's go through the questions. If you have any questions regarding this, and I'm only going to answer most likely questions regarding what I've talked about today, right? All right. So let's see if I have questions. Let's see, how do you use the blue and gray box? Is that long position option in TradingView? Yes, it's the long position option in TradingView, and I've used went style, and I have stop color, target color. My color theme is gray and blue, so I've just changed everything to gray and blue, including the stochastics RSI down here. It's it's blue and gray, everything. Even the Burbicator Pro here is blue and gray. Everything's blue and gray. I don't know why. It's all I like it. Right. So what else? Questions? Just shoot any questions you have. Right. So I'm getting. How long did it take you to? All right. So how long did it take you to become a trader? Like make money? Like how long did it take for trading to become your job? All right. So how long did it take? Well, like everything really changed when I joined the Birb Nest, right? That's when I kind of had the opportunity to. Crypto Birb, he kind of gave me the opportunity to become really good at what I'm doing, right? So everything kind of started with him. That it's not until I really joined the Birb Nest when I could really quit my day job and focus on this full time. And I'd say it took me 2 years. Before joining the Birb Nest, I've traded and I've learned how to trade for 2 years. I'd say I was trading profitable for 1 year before the Birb Nest, but I didn't really have the balls to take the step to do it full time. But the Birb Nest kind of gave me that opportunity to sit in my basement all day, every day. Right. Right. What else? please, the psychology part. I get lazy when it comes to triggers. Right, so the I'm not really sure I understand the question, but maybe. So I think the answer here is have rules, plan and rules. Have a systematic way of approaching this. Right, you see a level that you like, set alerts at that level, and you need to know exactly what you're supposed to look for before before actually entering, right? So for example, you need to tell yourself in advance, like price hits this level, and if this happens, I'm gonna press the buy button and I'm gonna buy this amount of whatever, right? So for example, on this chart right here, if price hits the 382 and forms a bullish engulfing on a daily, I am going to buy if the stochastics is at oversold. That's it, right? And you go to the 1 hour and you say that, all right, so if price breaks this trend line to the upside and creates a bounces of this area right here with a bullish engulfing, I am going to buy no exceptions, right? So no exceptions. You have to buy. You have to enter the trade. If you're not trading, you're not going to be making any money, right? So the very important part about trading is to get rid of the fear of actually trading, the fear of losing money, because it's not about money. It's not about money. It's about following a process, right? It's about following a very clearly defined system, right? And you're not supposed to even care about the P&L. I've disabled the P&L figures on everywhere I can. So I try not to view money. I'm trying not to view this as a way to make money. I'm just following a process, just like you're going to work and you're doing whatever you're supposed to do at work. You're not thinking about, every dollar you're going to be making with more work. You're just thinking about doing the actual work. And if you do it the right way, you're going to be making money, right? Because you know that the system you're following is a profitable one. So just follow the process and try not to think too much about your P&L. Because if you think about making money, I need to make money. When you start losing money, that's going to be very hard on you. Because you're expecting to always make money. But if you're approaching it in a from a perspective of probability, you can say to yourself that, let's say you have a 40% win rate, right? So that's quite low, but it's a lot of people have 40% win rate, and it's all about the risk to reward. So let's say you have a 40% win rate, but you have a quite high risk to reward. So maybe you have a 4 average R risk to reward of 4, right? So let's say you have a 4% win rate, average R of 4. You know that most of my trades are going to be losers. So you sit down at your desk and you're like, 60% of all the trades I'm doing today is going to be losers. But in the end, I'm going to be making money because I know that my winners of this system is going to be bigger than my loser, and it's going to, in the long term, outperform them, right? So if you're afraid of losing money and losing trades, you're gonna have a very hard time trading a system where you're actually going to be losing more than you're winning. Right? And even if you have a 60% win rate, there's a very high probability that your next trade is going to be a loser, because it's a 40% probability that your trade is going to be a loser, right? So you have to really look at all of this as a long-term process and All right, how do you determine level? The boxes you drew. All right, so I used the rectangle tool. Here to the left, you have the drawing tool here, and you have the rectangle right here. And I'm actually going to be having a webinar on how to draw the levels. So we're going to be talking about that closely in my next webinar. I should look for entry when bullish engulfing candle close at 4 hour. All right, so it's not that easy. Obviously, you have to combine all of this, right? But yeah, if for example you have a downtrend and you hit a level, and when you hit that level, you form a bullish engulfing on the 4 hour, that would be an entry trigger, right? But it would not be an entry trigger if it's part of a very strong, downtrend, and the hourly downtrend is down. Everything just looks bad and it's below the trend line and it's just below the resistance. It only makes sense if for example the daily or 15-minute market structure looks rather bullish on inside this 4-hour engulfing candle, and if that 4-hour engulfing candle kind of reclaims an interesting area, that would be an entry trigger. But I would recommend you guys go and look at Bitcoin. So go to the BTC USD shot or whatever shot you want and use the replay function in TradingView and try this out for yourself. When you have a low and a high and a reversal starting to happen, apply the fibs and see what happens if you get a bullish engulfing on any of these fib levels, and just take some notes, and you can quickly realize that the probability is going to be in your favor when only using a very simple entry trigger like that. Oh, sorry, I forgot. We got that secret code. So we're showing the secret code in this webinar. Use the link in this description below, or maybe we have the link in the chat. I know we have the link in the Discord as well. All right, you were saying about setup when you post on Twitter, simply catching the bottom. Which time frame you looking for going long? I don't understand, man. Like, I'm not interested in catching the bottom. Not interested. Right. Yeah, so the point here is not to try to catch the bottom. The point here is to wait for the bottom to be put in, right? So wait for the bottom to be put in. If you're looking at it retrace on a 4-hour and it hits an important level and you're like, that's the bottom, wait for the 1 hour or the 50 minute to show a bullish break in market structure, right? That's your confirmation of a bullish break in market structure at an area where you think it might be the bottom. So that's where that's your confirmation of a bottom. Let's go back and kind of look at the example on Bitcoin, right? No, that's the other one. Oh wow, is this the real time? Is this Bitcoin? God damn it. Let's hope we hold that area. I'm not liking this price action at all. Yeah, I can't find the bottom right now. So we got so many questions right here. So many questions. Have you ever used fib speed resistance band to find comps? No, I have not. It's a good one. So how much time do you invest in scanning the market, especially in crypto? With all the coins, it must be difficult to do all the coins. Yeah, so it takes me about 1 to 2 hours to scan the markets. In my Forex trading, when swing trading, I do my market scans every weekend. It takes about 1 to 2 hours every weekend. And when I'm doing the altcoin market scan, I usually do it 1 to 3 times every week. And what I do is I have my list here with all the coins on Binance, the Binance USDT and Binance BTC pairs. And basically what I do is I have this list and I go through them on the daily, and I'm like, all right, so 1 inch USDT, this looks interesting, might want to trade this. I add this to green list. AB USDT, breakout, nice retest, bullish market structure, I want to trade this. ACM, I don't even know what this is. Next, ADA USDT, yeah, interesting, might want to buy that break and retest. Ion USDT, and I continue like this until I reach the end. And when I've reached the end, I have a collection of coins that I'm interested in trading, which is the green list. And when I have this green list, I go into the lower time frames and try to optimize the setup and put alerts. And when the alerts go off, I might be interested in a trade, right? So that's my scale. Holy shit. Ethereum Classic. Wow. Yeah, so that's my basically my market scanning technique, and it takes a while, but it's manually doing the scanning is not only going to help you a lot with your help you get better at your technical game. It's going to it's going to force you to watch a lot of charts and look at different market structures, and that's key. That it's key to charting hours. Just check the charts and draw lines and learn. All right. And of course, I forgot, man. When at times where everything's bullish, it might be hard to use the market scanner that we have in the Discord server, right? But in scenarios like this, when we are, on the brink of maybe seeing a low time frame to medium time frame reversal, the market scanner is going to help you a lot, because you can then, and I'm talking about the market scanner in the Discord server. Where do we have that one? So the market scanner in the Discord server is going to help you a lot to find the coins that are kind of showing a different behavior compared to the other ones, right? So let's actually take a look at the market scanner right here. Now, obviously, when everything kind of looks the same like this, when everything, oh, you can't see it because I can't, never mind. So when everything kind of looks the same, it's going to be hard to find something that kind of out of the ordinary behavior. But when you're seeing 10 or 15 very bullish coins in a sea of red, obviously those are the coins that you are supposed to go long on, right? So the market scanner in Discord is a phenomenal tool that you can use to have a quick overview, not only as a market scanner, but a quick overview of the what is the market telling us? If it's a bullish or bearish. Obviously, if everything is green, we are in a very strong bull market. When you have mixed signals, we are probably ranging or in a potential reversal area. And if you actually have a reversal begin to start, and get most of the market scanner coins in red, if you see 5 or 6 green ones, you want to trade those and you want to long those. All right. No, that's already asked that one. Let's see. All right. I got a question about moving averages or exponential moving average. Why 20 and 50? How do you decide? Why not something average like, I don't know, 17 or 46? How do you choose those that happen to fit the price action? All right. So there's two ways to do this. Either you just use the most used one, the normal ones at even numbers. Like in the traditional market, you are most likely going to see traders using the 20, the 50, the 100, and the 200. And then you have the guys using the numbers based on the Fibonacci sequence, which would be the 21, the 55, the 89, and I think that's 137 and something. But usually you're going to add the 200 as well on that. So it's just a matter of, I mean, I used to use I began using the 20 and the 50 and the 89 and the 137, I think it is, way back. But now I've just switched to the 20 and the 50 because that's what I'm using in the Forex market, and they're so close to each other, so it's not a big difference. It's a bigger difference on the lower time frames, but I've found that using the 20 and the 50 while scalping works much better than the 21 and 55 for me. So it just makes sense to use the same on the higher time frames as well, because there's not a huge difference. All right. Are you using the default tools, Fib tool setting? No, I'm not. Check the replay from the webinar from yesterday, and I'm going to be showing you the exact settings and everything of the Fib tool. This is an interesting question, right? With $1,000, is it better to trade it all or split to? I mean, so I think the most important, obviously, when you don't have a big account, you might be taking more risk, but I'm going to be talking about that more in my webinar on risk management. But it doesn't matter how much money you're using to trade. The only thing that matters is, can you develop a profitable, and we're talking about trading here, not investing, not long-term holdings. The only question that you need to figure out is, can you develop a profitable trading system, and can you trade profitably using that system, so that you know that all the money that you put in your trading account will in the long run grow if you're using that system. If you think that increasing risk is going to help you grow your account quicker, you're wrong. Increasing risk will just make you lose more money when you actually lose, which will probably just dig a deeper hole with every big loser. So be consistent with your risk. I recommend risking no more than 1 to 2%, and then keep on adding funds to that account. And with time, you're going to see that account grow and grow and grow. All right, so time is actually up, and yeah, what do you say is your best way to find entries? Well, this webinar today is basically all about that question. So I think you have to watch the webinar, and I have showed you in great detail exactly how to find your best entries. All right, guys. So I would like to thank you all, and please subscribe to the channel. Hit the like button. So please subscribe to the channel, hit the like button on the video, and press that bell button. All right, guys. Thanks everyone for joining today, and yeah. See you guys in the Birb Nest, in the Discord server. All right, guys, take care and have a great, what day is it? It's Tuesday. Have a great Tuesday. Take care.